Hi guys, welcome back to the channel. Today I wanted to give you an update and share my thoughts on Nebius, which reported its Q3 earnings just a few days ago. The market didn't react very well, and that's probably because of the general concern that the December interest rate cut might not happen, which was almost taken for granted, and fears that we might be in an AI bubble, with tech giant valuation hitting new highs. The stock is down about 30% just in the past few days and around 40% from its mid-October hikes. Despite this, I think Nebius Q3 was pretty decent. Behind the stock fluctuation, I have no doubt that Nebius in the next few years will become much bigger than it is today, and its stock will be more significantly more. Right now, we are talking about a market cap of just over $20 billion. And I think this because there is no question that much more compute will be needed and built. And from what we have seen in the earnings call over the past weeks, there is no doubt that the market will still be supply constrained at least through 2026. Let's start with the numbers from Q3. Group revenue was $146 million, up nearly 355% year over year and 39% quarter over quarter. The core infrastructure business, which made up almost 90% of total revenue, grew 400% year over year and 40% sequentially. The annualized run rate revenue for the core business at the end of September was $551 million. For full year 2025, Nebius guided group revenue to a range of $500 and $550 million and remains on track to hit an annualized run rate revenue of guidance of $900 million to $1.1 billion by the end of 2025. The most important thing behind the numbers is that Nebius sold out all of its available capacity, and the management said it clear. We continue to see a consistent trend. Every time we bring new capacity online, it sells out immediately. The big announcement on the Q3 call was another major deal, this time with Meta, worth approximately $3 billion over the next 5 years. Some were surprised by the size, much smaller than the Microsoft deal in September, which ranged from $17.4 to $19.4 billion. But the reason is pretty simple. The contract size was limited by the capacity they had available. If Nebius had more capacity, they could have sold more. Management explained that with NVIDIA's new Blackwell generation coming online, so the Blackwell 300 series, more customers are interested in purchasing capacity in advance and securing it for longer periods. While no official statement was made, it seems that Meta deal refers to the latest NVIDIA GPUs, the Blackwell 300 series. And Arkady emphasized that Nebius expects to see more large, long-term deals with hyperscaler and anticipates that high demand will allow them to focus on deals providing the best margins. They are very focused on profitability, not just growth. Even though Nebius is careful with mega deals, their main focus remains building their own core AI cloud business. In Q3, they welcomed AI-native startups like Cursor and Black Forest Labs as new customers, which is a strong validation of Nebius software. Cursor is one of the most talked about startups right now. Jensen Huang even recently said Cursor is amazing and that if it were up to him, he would invest heavily in it. Nearly 100% of NVIDIA coders use Cursor every day, making their work easier and far more efficient. Startups and enterprise clients remain Nebius focused and have very different needs compared to hyperscalers. Hyperscalers like Microsoft Azure, AWS, and Google Cloud primarily need raw compute power and rely on their own software. Startups and enterprises, however, require highly efficient software, and this is where Nebius truly adds value. Mega deals are financially attractive, but the long-term opportunity lies in building the core AI cloud. Enterprises and startups are looking for a strategic partner rather than juggling multiple vendors, and Nebius aims to build long-term partnerships that help these customers meet both current and future capacity needs. As I've already mentioned, demand will continue to exceed supply for several years, but this temporary imbalance will eventually even out. When companies stop just chasing raw compute and start looking for the best software, Nebius software will become a true moat. So what Nebius is doing is not just growing raw capacity, but also building a real AI cloud that supports real businesses and creates lasting value. As mentioned, capacity is the main bottleneck for Nebius growth. Looking to 2026, they expect contracted power to reach 2.5 gigawatts, up from 1 gigawatt announced in August. They plan to have approximately 800 megawatts to 1 gigawatt fully built and connected by the end of 2026. This will allow Nebius to achieve an annualized run rate revenue of $7 to $9 billion by the end of 2026, more than half of which is already booked. An interesting point to understand the difference between contracted power and connected power was explained by Arcadi. When we plan data centers CapEx, there are actually three stages. The first stage is securing the land and the power. The second stage is building the data centers themselves. This includes the building shell, electrical and cooling equipment, batteries, and physical installation, which we call connected power. The third stage is deploying the GPUs themselves. From a CapEx perspective, it roughly breaks down into three spending blocks. Securing land and power is relatively cheap, around 1% of total CapEx, depending on the scale. Building the data centers and connected power costs about 18 to 20%. The remaining 80%, the largest part, is for deploying the actual GPUs. If we want to build as much as our capital allows, the strategy is: first, secure as much capacity as possible because the cost is relatively low. Second, build as much connected power as the capital allows. And third, deploy GPUs only when there is clear, contracted demand. That massive 8% of CapEx only comes into play once there is real demand. So, Nebius only deploys GPUs once they are certain there is demand and they can sell all that capacity. It was also mentioned that once the power is connected, deploying the GPUs takes about 6 to 12 weeks. To make it simple, connected power means the data centers are fully ready to host GPUs, which are deployed only when a deal is ready to be finalized. Nebius' position in AI infrastructure remains extremely strong. They have sold out all capacity and demand will exceed supply for years. They are also making great software progress, which keeps them a preferred partner for startups and enterprises, even when compute capacity becomes abundant. Another great update is that finally in December, Avride, the autonomous driving division of Nebius, in collaboration with Uber, will start offering robotaxi rides in the city of Dallas. To wrap up, Nebius continues to execute. Demand for compute capacity will grow for the next decade, and Nebius is positioned to become a leader in this market. Even if the stocks drops further in the coming weeks or months, I have no doubt that in a few years it will be worth far more than today. That's why I'm not only holding, but also increasing my position. That's all for today. I hope you enjoyed the video. See you next time.